today we have a really good show. I know that everybody would look forward to hearing from Bob Chapman. Since he had passed on, we've been sort of had a void here about what's going on economically. There's a fellow by the name of David Morgan, the Morgan Report. You'll be able to find him at silverinvestor.com. Knows an awful lot about gold and silver, but also just general economic news, what's going on in the economy. David Morgan is a Rhodes Scholar when it comes to information regarding and evolving around precious metals and other markets and what's going on in the real world. Also, David Morgan, like Bob Chapman, $149 a year subscription. Not too long ago, I guess maybe 1 or 2 years ago, Bob Chapman came to me and said, you should work with David Morgan. And I know I've been working with David Morgan for many, many years here at the Genesis Communications Network. Just because Bob had always admired David's work. And David Morgan is the author of The Silver Investor, a fabulous report talking about economics and what's going on in the precious metals market. But, David, now you cover more than just the precious metals, though, don't you, in the newsletter?
Well, that's correct. The subtitle is Money, Metals, and Mining. And we look at really anything of value in the resource sector. I mean, for example, we featured copper companies. We've done Moly. We have a driller that's kind of equivalent of what was going on in the gold rush in the 1849 time frame in San Francisco area, or north of San Francisco, really. And the guys that were selling the pans and the picks were doing pretty well, and that's really what a drill investment's all about, because regardless of if they find something or not, all these small junior companies need to drill for results. And so drill companies in our portfolio, so we're pretty diverse. I mean, it's basically mostly about the real economy, what's really going on a global basis, what real money is all about and why you need it. And then we go into all the metals, but we focus primarily on gold and silver, Ted. But we do look at other areas on the mining side that would produce results that people are happy with. In other words, bring them some profits.
Well, I know that I've had a lot of people were following Bob Chapman, and Bob was a regular guest on the Butch Pah show for many, many years, probably almost, close to 20. And, one of his things that he had focused an awful lot on in his newsletter were mining stocks. And maybe you can just, to give us a little bit of an idea of what's been going on in the mining world, because, the physical gold and silver, we see that. I know that there's a lot of people that listen to the Butch Pah show had purchased, bags of junk silver and bars and this type of thing, but they also ventured off a little bit in the mining area. But the mining area is actually much more profitable investment to get into, more speculative, if you will, because the profits that a company makes when the market goes up is much more substantial than even just the metal itself as it's moving up. Am I not wrong?
Well, yeah, you're correct in most cases. And Ted, thanks for being so honest about that, because you are a bullion dealer. Well, let me just start with what I teach first, and that is that I'm not a bullion dealer. But I say if you're going to start a metals portfolio, start with the real metal first. And I have a fair amount of subscribers that really aren't interested in the mining stock. They read my work anyway because I give them a good basics on the economy and the honest money situation. And also I do timing, and my timing efforts have been quite good as well. But coming back on point, so once you establish a core position in physical metal that you own, then you can go into mining shares. For example, we had Silver Standard at 65 cents Canadian, and the Canadian dollar was not equal to the U.S. dollar in those days. And that stock went to $40. Now, I'm not saying everybody got out at the top. I stopped liking the stock somewhere around the $22 level. But still, 65 cents, as good as silver's done, which is about 600%, that one mining company did far better than silver. Another example was a company called Western Copper. And Western Copper was pretty much a copper mine with a lot of silver. They changed the name to Western Silver. The stock was well under $1. We had it at that level. It moved up substantially. It was bought out by Glamis, which is a pretty substantial gold company. And that company, Glamis, was bought out by Goldcorp, which is one of the stalwarts. And Goldcorp was one of Bob's favorites. I used to chum around with Bob in the early days when he was doing a lot on the speaking circuit, such as myself. So that one would make you probably 3,000% if you held it the whole time from the time we recommended it. And we've had some losers, Ted. I mean, everyone does in this business. I would be disingenuous to say that everything we touch turns to gold, figuratively. But yes, you do get a lot of leverage on the upside. You also get on the downside, unfortunately. So it's usually a leverage factor of about 3 to 1. So if gold goes up 10%, most of the mining shares go up about 30%. And conversely, if gold goes down 10%, many of the shares will go down about 30%. However, what's happened recently, meaning in the last year and a half or so, once silver peaked out in April of 2011, is these mining shares just got beaten up to a pulp. And they were the cheapest they'd been relative to gold in 30 years. And it looked like a bottom to me. I told all my paid members, this is it. This is a bottom. You really got to start buying in here. And my subscription base is as low as it's been in a few years. In other words, a lot of people dropped out, lost faith, couldn't invest anymore, whatever the reasons were, and I'm sure most of them are valid. But that was the time to buy, and still is. So these shares really represent value. And again, I want to emphasize, if you've already established a core position in physical metal, but you do get a lot of leverage, but it's also a little more of a wild ride, and gold and silver by themselves are a bit of a wild ride. So you have to be prepared mentally when you invest in this market. But if you do, it can be extremely richly rewarding.
Well, I was a securities broker too. Yeah, you're right. I am a bullion dealer, but I did spend a lot of time selling stocks and actually promoting mining stocks. And when I did, the whole idea is that a company that is producing, let's say, gold at maybe their expense out of ground is $800 an ounce, and you're selling the gold for $900 an ounce, your profit is $100. Well, if gold goes from 900 to 1,000, your profit just doubled. So you have such a neat little edge there. I've always liked the mining companies. One of the things that I've always, you need to know what you're doing. There's no question about it, because there's plenty of mining companies out there that really don't have reserves but promote themselves that they do.
Oh, that's probably one of the biggest problems. Hopefully this will be said objectively, but most of the time in life, or my experience in life, is you get what you pay for. But in the newsletter business, that's not always the case. There are newsletters that are much more expensive than mine, and these guys really don't value companies the way we have. Everyone that works for me except one has a finance background. Most of them have some mining experience. And the point is that a lot of people play in the junior sector that don't have reserves. They're actually looking for material, and a lot of people are misled into thinking these are actual mines or going to be producing when they're really nothing more than what we refer to in the business as moose pasture. These things are just blocks of land that might be close to a producing mine, and they're promoted heavily, and they really don't have much merit. We avoid those for the most part. I'm not saying that we haven't made mistakes, but we haven't deliberately got any moose pasture. Once in a while, we have an exploration company that doesn't work out, but we're very forthright about what's going on. But we weight the portfolio, and Ted, is your background in the securities industry, we put top-tier, cash-rich, unhedged mining companies at the top. These are kind of companies that are like stalwarts, that you can go to sleep at night after night after night, knowing you're going to be in good hands, good management, producing properties, diversified around the planet. This is stuff that's going to make you money slowly and surely. And slowly and surely is like 20% a year compounded. Well, for those that know Warren Buffett, and I'm sure almost everyone listening to GCN knows that name, all Warren Buffett did was compound at 20%. It's very difficult to do time and time again, but some of our top picks keep doing that, even in today's market. So that's where you put a lot of your funds. And then we have the mid-tier section, which is where you actually have the best risk to reward profile, where you have the best chance of making good money, like in the 200-300% range, but the risk is somewhat higher than the top tier. And then we do speculate, but the speculations, we're very clear. You should, 1, spread out, 2, only bet risk money, and 3, if these companies start to move up and do what they hope would happen, like the example I gave on Western Copper that became Western Silver, and that stock went from under $1 up to 3 or 4, and then it eventually went up to probably 50 when Goldcorp bought it out. We added to it on a higher price. And why? Because it's a much safer bet. That's why. Because we have more information. There's more knowledge. We know what the assets are. We know they've made a discovery. We know it's a big discovery. We know the market's undervalued the merit of that discovery. So I've been investing in this sector for 4 decades. And it doesn't make me perfect, but I certainly am a seasoned investor here. I know, how to read the drill results. I know what I'm looking for and what to look for. And again, it's not that I'm bulletproof and don't make mistakes, but I put up our track record. And it's not just me, it's a team. We have, people behind the scenes, and my research analysts, I'll put up against anybody, even, mining analysts from any bank you can name. So anyway, that's it, Ted. I probably pitched it too hard, but I'm very passionate about what we do here, and we do focus mostly on the mining side, although we spend a great deal of time on the money side as well.
Sure. No, one other question that I have for you, and we'll just touch this before the break and then maybe get into it right afterwards. But we keep on hearing that there's just not enough silver production to meet demand nowadays. And what's your thoughts on that? Are we able to get enough silver out of the ground at this point? Is there truly a shortage like we've been hearing about, or where are you at with that one?
We were in a deficit between 1990 and 2006. And a deficit means that we did not meet the total demand for silver by mining and recycling. But supply and demand always meet. So how did they meet? They met because there was 2 billion ounces above ground stockpiled of silver in bullion form in 1990. And that was depleted down to about 500 million ounces by 2006. After 2006-07, around 2007, mining activity plus recycling basically exceeded total demand slightly. And that's based on the two best silver studies available. One's from GFMS, Philip Clackwick, that I know quite well in the United Kingdom, and Jeffrey Christian, who was just here at the Silver Summit a few days ago from the CPM Group in New York. I'm not sure I agree exactly, but these figures are hard to get. The point I want to make is that there was an extreme amount of new mining activity from the year 2000 onward. There was such a commodities boom throughout China, particularly, meaning China's demand and mining in China and elsewhere on the planet, that the amount of silver mined increased substantially during that 7-year time frame. And because of that, we actually are now in a situation where supply and demand are met not by mining alone. Mining alone will not meet total silver demand. But there's enough recycled silver every year, roughly 200 million ounces, that's recycled every year. So the recycling and the mining does meet total demand now, but it wasn't for 16 consecutive years.
So recycling really has been able to be a big factor in there. And I would imagine coming from computer parts and whatever else silver is used in, we're not using, obviously camera, photo development. I mean, the digital age is here and we're taking digital pictures and that doesn't require silver. So, I always thought that might be a big hit on the silver, but obviously not. If you're seeing $50 an ounce again, we just reached our peak that we had in 1980. When Jimmy Carter was leaving office, Ronald Reagan was coming in, and we had double-digit inflation. Paul Volcker was putting the brakes on the economy by letting the interest rates go up to whatever their market would take them, which is the exact opposite of what we have right now as far as monetary policy coming out of a central bank. And with silver running up to $50 an ounce at that time, and then now here just a couple of years ago we had $50 an ounce again. Mind you, that doesn't take in effect an inflation difference. I mean, if you put that involved in there in the equation too, it would probably put silver closer to $150 to $180 an ounce. But David, you were talking about the thing. I mean, obviously you had a little boost here too. As soon as Ben Bernanke came out and announced that we're going to have quantitative easing number 3, and in this time around they weren't going to put a time limit on it. It was just going to be $40 billion a month until they decide the unemployment figures are right or whatever it is that their trigger is going to be to make them stop. $40 billion is a lot of money, and of course they already committed to $45 billion till the end of the year, which makes it $85 billion of freshly printed new currency coming into the economy. I mean, that is obviously a boost for commodities. How has that affected you and your stocks and your stock picks?
Well, quite well, and I'm going to answer your question, Ted, on QE3, but before I do, I'd just like to give a little background on QE2, because when, I do both investing and trading, and we actually have 2 reports. One's based on the overall buy and hold strategy pretty much, which is the stocks only. And then I have another service which requires an internet connection, and you've got to, I do videos on the trading that I do, and also the videos that we do at the gold shows and interviews of mining companies, that kind of thing. Back on point. I was trading silver from the long side once it broke out at 19, and it's funny I think you said that exact number, Ted. And 19 to 26 was a nice trade. I mean, if you use any leverage there, you're going to make a lot of money. Again, this is after you've built your core position. This is after you've established, stocks that you buy and hold. This is for speculative funds only. So it looked to me like it was topping out at 26, and I actually exited the trade. Then QE2 was announced. I got right back on at 26 plus, I forget the exact decimal points, and rode it from 26 to 48. Now, during the time that it moved past about 32, 33, I started to get a little concerned. And backing you up on that, Ted, I was in the market in the 80s, late in the 70s and 80s. And I saw this thing going parabolic. I heard the kind of panic buying that was going on. I knew the dealers were having trouble getting product from wholesalers. I know the markets fairly well. And I was telling everyone on the private side of my members only, and also on the public side during interviews like this, if you're buying above 35, be very careful, because this thing's getting out of hand. I love silver, but all markets go up and down, including the silver market. Interestingly, some of the newsletter writers, and I won't name names, are giving me some guff about that and saying you're going to be wrong, you're going to ruin your reputation, silver's going to $100 easy, we're going to see at least 75 and on and on. Well, I do my own work, I'm my own man, and when it got to 48, I said, you know what, that's it. I'm out on my trading position. I'm keeping my coins, I'm keeping my bars, I'm keeping my physical, I'm keeping my core stocks. All I'm doing is taking this trade from 26 to 48 off the table. And lo and behold, it turned out to be probably within a couple of days of the exact top. But that was the exact top of my newsletter business. And once it fell so sharply, I knew the inevitable, that my business was going to fall back as well. I expected it. It did. I'm not complaining. It's just the way these markets move. Mine's very much tied to the price of silver. So going on to your question about QE3. Well, a lot of the people that are very astute on this stuff, and I count myself as a lifelong learner. I'm no know-it-all, but I'm a learn-it-all. This is really opening the floodgates long-term. Basically, a lot of other writers have called it QE to infinity. And that's basically what the Federal Reserve has said. The problem is that the Keynesian model, which is really unsound and untruthful and really based on a lie, that you can print your way into wealth, which is not true. You have to earn your way into wealth, is not working really for the first time in quite some time, meaning when the Keynesian model was established in the 1900s or so, and more so during the 1940s, 50s, and 60s. But regardless, the idea that you could prime the pump, have easy money flowing, and it would start the economy, and it would make it stronger, and then you back out with government interference. Well, QE1 didn't work, QE2 didn't work, and QE3 won't work either. Because what's happening now is the depreciation of the currency is going to accelerate at some point, and I think we're very close to that. And that's when a whole new group of people wake up to the fact of what I just said, that the more funny money that's put into circulation, the more it devalues what you already have. Watering the milk never works. It's an untruthful way to go about the economy. It's based on a lie. And because of that fact, more and more people are going to come to the realization that they need to protect themselves one way or another. And that means more money going into gold and silver. And that's going to take these markets far higher. The problem right now with the metals markets is that it's kind of a niche market. So few people really understand economics that when you talk gold and silver, they think they're extremely risky. But I always like to ask the audience, what's risky? A money that lasted for 4,000 years or a paper currency that has an average lifespan of 39 years? I just gave a speech at the Silver Summit called Brief History of Paper Money. And in that study, 599 paper currencies have been tried over the last several hundred years. And guess what? All 599 have failed. So to think that the U.S. dollar won't fail is something that most people better think about very carefully and come up with a really good answer why it won't. And if you look at it from a longer-term perspective and you realize the 1913 dollar today is worth about 3.5 cents based on the Federal Reserve's own numbers. I'm not using numbers off of my head. I'm using the numbers that's on their website. Well, if you had something that's worth 100 points and you had 3.5, in other words, you had a 100-point quiz and your daughter brought it home. She's 12 years old in third grade or whatever that is, fourth grade, and she got 3.5 out of 100. I think you'd say that's a miserable failure. And that's where we are on the U.S. currency. The problem being, if you want to think of it that way, is that it has taken so long to get there. In other words, since 1913 till now is 100 years. So over a 100-year time frame, people have adjusted to it, gotten used to it. They think inflation's good. They think we should have some, and on go the stories. But the real truth of the matter is, if you woke up your great-grandfather from the time he was, say, 20 years old and put him into present day, he would see the hyperinflation, because that's really what it's been over that time frame. We haven't gotten there yet. I don't think the U.S. will see a hyperinflation. I do think we're going to see enough inflation, enough depreciation of the currency that you're going to see prices double rather quickly, and that will put the hurt on most Americans.
You know, it's funny you talk about that, and I can tell you I appreciate the market that we have now much more than I will that kind of market, even though my phones ring off the hook and people are dumping money into my company by the bucket loads. You know what? It gets to be so volatile, and it gets to be so hard to be able to fill orders and actually not take a loss during that time period, that my safest times for me in the environment is what we have right now. We have a healthy demand that's coming in, and it's turned around from, like you said, that slow time that we just had previous for about the last year, and then we had a little bump in the fall, and it just stopped. You know, it was just, typically it was, what I would say was the backside of the pendulum swing, coming off of that really heavy market push. And like you said, I mean, you know, when you were at $48 an ounce, you knew that you were going to have a correction in business. Just how many people are going to subscribe to your newsletter? Well, the same is true for dealing in the bullion market. I mean, I hear companies, complaining about losing, 25% of their business. Well, let me tell you something. In the gold and silver business, you lose 90% of your business when it has a swing. And you're dealing with the fumes and the it's like picking up rocks and looking for bugs so you can have something to eat. I mean, it gets to be that tough. And then all of a sudden the market comes back around and it's pretty steady. Right now we have a steady market. The type of market you're describing is going to be hard on people that have saved their lives, anybody that's had a pension. I mean, for the goodness sakes, people will have the choice. Do you choose to heat your home today, or are you going to buy food? We're looking at gasoline right now, somewhere trading between $3 to $4 per gallon. I mean, it may be $10.50 to $11, $12. Who knows where it's going to go in an inflationary environment? And that's not even, that's not runaway inflation. It's not even, a crazy thought to think that gas can more than double in price. And silver's going to do it too. We are right now in a trading war with we're in a currency war with our trading partners. We're dropping the value of our currency, so our competitors out there that we trade our goods and services with are dropping theirs. So our prices are, the price of our commodities that we're exporting don't drop faster than and we get a competitive edge. I mean, to me, it always made sense to have stability in the marketplace. That's what grows an economy. When a person's in business and they're trying to figure out a way to make it in business, you want stability. You want to be able to go, okay, I know that if I manufacture this many more widgets and I know where my market's at, I can probably predict how many I'm going to sell, and my costs aren't going to change by a whole bunch, and I'll be able to depend upon what's going to happen in the future. Therefore, I can plan. In this particular case, it's become so volatile, I don't think people know where to go.
Oh, I couldn't agree more. In fact, during my speech at the Silver Summit, I spoke about that. During times of monetary stability, where you have really a bimetallic standard, both gold and silver coins circulating as the money, what you have is a growth rate that's commensurate with the increase in the supply, which gold grows at about a 1.5% rate a year. Silver is more volatile than gold, but The point is the money supply grows at, let's say, 2%, the economy grows at 2%, and there's stability. You can plan. You don't need a financial planner under a gold standard. You know that 30 years from now or 40 years or 50 years, however long you're going to work, that an ounce of gold is going to buy you exactly the same amount of goods and services it buys you today, and probably a little more. Because what really takes place during an honest monetary standard is that productivity still increases. People are entrepreneurial. They find better means of production. They make things more efficient. They put the ripple in the bobby pin, as I said during my speech. So these things actually add to the productivity, and the money actually gains a little bit of value. And so you, again, don't need a financial planner. You know that if you want to have, an ounce a month of gold, I'm talking in the old days now, would give you a great lifestyle, then you knew how much you'd have to save for retirement. These days, it's all based on a lie. You go in to see a financial planner and say, well, we assume inflation is going to be this, and we assume we're going to be able to beat inflation by doing that, and, at the end of 30 years, you're going to be looking at this, and then. It's all nonsense, because no one can predict things. They're so volatile right now. I mean, look at oil. It went to $147 a barrel. Now it's under 90. But, these markets are going volatile, and volatility shows uncertainty. And what's uncertain is the whole economic structure. I mean, that's the truth of the matter.
Yeah, that's for sure. And instability will drive people to gold and silver. You can see it going on all across the entire world. We look at how the United States dollar is doing in the indexes, but they only index themselves against the foreign currencies who are also having trouble. We all know Europe's in dire shape. China's seeing inflation. I mean, there's just, no matter where you turn, you can see sort of the same activity going on across the globe. So how do you measure yourself when you have a paper currency that is devaluating against other currencies? If we're all falling, which one? How do you find a good measurement? And obviously, that's in the commodities arena, because they're not printing gold. We have such a short segment, David, and your newsletter is just fantastic, and that's the reason why I have you up here. People should be reading your newsletter. It's $129 for the basic offer to get into the newsletter for a year. I know you have value to added memberships all the way up to $1,000 a year. But Midas Resources is buying a full year subscription. You don't have to pay for it for your first year. What we do is we will have you, like we did with Bob Chapman. If you pick up $1 franc from us, one franc from the European, there's Swiss and Belgium and so on and so forth, the franc coin, they're at $375 a piece. And then what we do is we buy the year subscription for you, which is $129, which puts that franc down to $245.89 for the coin, if you consider the discount. Multiply that by 5, because it's basically a fifth of an ounce of gold. You're coming up with $1,229.45 for an ounce of gold. $1,245. You're not going to find gold in the market now anymore for $1,245, because the spot price of gold is trading closer to $1,721.20. And of course, if you're going to buy an ounce of gold, you're not going to pay $1,721.20. You're going to, in the bullion market, you're going to be closer to $1,800 an ounce. So there you go. It is a really good way to be getting into this. You can call us at 1-800-686-2237 for that offer. You can also go to silverinvestor.com. Isn't that right?
It's actually silver-investor.com. There's a hyphen between the two words, but that's correct.
How long before we start to see silver? I mean, we're already seeing it. We went from $26 an ounce to $32. Obviously.
My thoughts, Ted, I'll interrupt you. I know we're short on time, is that we're going to see 35 to 40 in silver by the end of the year. We're going to see gold probably up toward the 1850 level. 2013 is going to be a breakout year. We're going to see gold in the new nominal highs, probably up to the $2,500 level. Silver probably well above the 48 nominal high, into the 60 to 75 range. I really think a lot of new buyers are going to come into this market, regardless of who wins the election. People are going to wake up to the fact that you can't live a lie, and that's the kind of economic system we've been having. You can't solve a debt problem with more debt. As you said, Ted, we're only making it worse. More people are going to wake up to that reality, and they're going to take action, and that means it's very bullish for the precious metals.
Yeah, and of course, like you said, I mean, since 1971, when the Bretton Woods Agreement was ended by Richard Nixon, they called that the Nixon surprise. We've had no goal, no bar to hold the currency to. We were at $36 an ounce, quickly rose it to $42 an ounce, and since then it's just, sky's the limit, and truly, with the way that the Fed is accelerating the printing presses right now, the sky is the limit. You can almost smell the smoke coming up from Washington D.C. as they're running those things. It sort of boggles my mind that we can do this, and people look at it and think that it's typical and not unusual.
I agree, and I think the reason being is what we said earlier in the show, is that it used to work. I mean, for a while, you can live this thing. If you're a very prosperous nation and you're making lots of stuff, you can prime the pump for a while and get it working for a while. But it doesn't work in the long run because you can't add debt and solve a debt problem.
Well, thanks for coming on the show, David, and you can get that offer by dialing 1-800-686-2237, or that's silver-investor.com. That's silver-investor.com. Thanks a lot, David.
Buy real, get real, be real.